So I was scrolling on my Twitter feed yesterday and I saw this video and it pissed me off. And I don't even want to explain what the video is. I'm just going to let you watch it firstly.
Question for you. What was the most amount of money that you guys ever made in a single year?
Probably 450.
I think about $500,000 is mine.
I started my family practice clinic with one other person. Carl started his veterinary clinic. We're both very successful.
What is your best financial advice that you have for younger people today that you wish someone told you coming out of school?
If you start at 18 and maximize your retirement, you could probably stop after 15 to 20 years. All you need is index funds, 2 or 3 of them. You invest monthly I'm still doing it. I set up an asset allocation and never think about it.
Never touch your retirement money. Pay yourself first. Never pull it out. You get a 10% penalty. Any job you have, maximize it. And don't be afraid to fail.
And so the reason this video pissed me off is because the advice that this video shares is advice that I don't personally believe is going to be useful going forward. Now, most of you watching this probably think that doing some sort of passive stock investment is going to make you money over the long term. And you would be correct to think so because that's what's happened for the past 100 plus years. But the difference between the past 100 years and the next 10, 20, 50, 100 years is the context of what is happening in the world based on the population growth. So what is the main reason that stock prices have been able to make everyone money consistently over the long term for 100 plus years now? And especially so for these old people in this video. Well, the main thing is that the population has grown from 2.5 billion in the 1950s to literally over 8 billion in 2023. That is an extra 5.5 billion people that have come to exist on the planet since these guys in this video were born, which didn't exist before. And the thing is that the reason stocks go up in price over the long term, like they have, and make people lots of profit over the long term, is because these companies that they're investing in that are inside of this index, they have a larger and larger pool of people that they can sell to. So in 1950s, let's say whatever company existed back then had 2.5 billion people they could sell to. And in 2023, if that company still exists, they now have 8 billion people they can sell to. Now, when you have more potential customers, you have more potential revenue. More potential revenue means that your company has a higher valuation. When your company has a higher valuation, the price of the stock is higher. And so when you have a consistently increasing population, and not only an increasing population, but an increasing rate of growth of the population, you have more and more customers, more and more revenue, more profit, higher stock prices, and this trend just continues in a positive feedback loop as the population keeps going higher and higher and higher. Now, if that was to be the trend into the next 50 years, obviously the stock prices could continue going higher, right? Well, this is the problem. The past 50 years and the past century was the most transformational period of all of human history. We had the most amount of people being born, the most amount of innovation, the most amount of prosperity. Every single metric that you can possibly measure was as high as possible. And this is because of the population growth. That's the main contributing factor. And so we don't have this same population growth going into the next 50 years. And that's why this advice is so bad, because these old farts, they basically look at the 50 years that they've existed prior and they go, oh, this is going to continue. Passive stock investing is, all you have to do. In 15 years, you can retire. No, you can't, because population growth is not the same as it was. And let me show you some data to support this. So in this photo here, you can see the absolute increase in global population per year. So what it's showing you is basically, in a really simple, idiot-proof way, each dot represents how much higher the population was every year. So in 1950, let's say, it was over 40 million. Over 40 million was the increase in that year of the population. And so what we have is not just a growing population in this image, but we have a faster growing population every single year. Look, these old dudes, they're probably born in 1950s because they're 70, right? Around 70s. And you can see that literally when they were born, every single year, without fail, more and more people were being born and the population was growing at a faster and faster rate. And even, in the past 10, 20 years, the growth has sort of slowed down a bit, but it's still in the high range. It's still high enough that it's not an issue. But you can see that there is a projected net change in the population where we have a downtrend occurring. And that's what the next 50 years is going to look like. So you can see that in the 50 years they existed, they had an uptrending population growth. But in the 50 years that we're going to exist, assuming you're watching this and you're going to exist for 50 years, you might not. I might not. You can see that the population trend is going down. And when the population trend is going down, this creates a lot of negative feedback and a lot of deceleration, which actually is not going to make stock prices just go up forever, right? Because what we have is an aging population. You can see it in this photo from 1950 to now. We have had an insane amount of net population growth. And the thing is, over the next 50 years, all these people who were born, who contributed to the growth of society, are now going to be getting old, and they're going to be looking to retire off of these passive investment funds that they've invested in. So when you have a decreasing population, which means less people to work, less people to contribute to society, and you have two, an aging population who all have these passive investment funds that they're going to begin selling to fund their retirement, you have a very, very bearish setup where you have not much demand of new people and a very heavy amount of supply from everyone looking to take profits, right? Because this is almost like a Ponzi scheme, right? This is how these retirement funds work. Retirement funds are a Ponzi because you being able to retire requires someone else being born who can buy the stocks off you that you were trying to sell at a profit. It's a big Ponzi scheme. And the problem with this retirement fund Ponzi is that the Ponzi will continue to go up for as long as there is enough new people being born to make up for the amount of old people who are going to retire. Because people being born are people who are going to buy stocks, right? To set themselves up for retirement. And the people who are going to sell stocks are those who are old, who are already looking to retire. And so it's this constant battle between new people buying stocks and old people selling. Old people do not buy stocks because when you get to the age of 60, 65, you're not working. Most people are not working. They're just living off the money that they've made prior. With an aging population and a declining new amount of people being born, this is a very, very negative setup, which is, in my opinion, going to mean that passive investment funds are not going to bring the returns that they once did. And so basically everything that is yet to occur for majority of the world, including the US, Europe, etc., has already happened in Japan over the past 30 years. And you can see in this photo the price performance of one of the big, passive stock indexes in Japan. It has not actually broken any all-time highs in the past 30 years. And so if you were these old guys investing in the Nikkei 225 index 30 years ago, saying, if you just buy index funds 15 years, you can retire. Well, you know what would have happened? You would have not only lost money, you would have lost money to inflation. So it's a double loss. Inflation from 89, where this photo starts, to 15 years later is a massive amount of inflation. And it's also you lost money because the stock price went down about 50%. This is a potential scenario for what can happen in the US, because the same factors which contributed to Japan being in a macro bear market is the same factors which are starting to appear for the US, for Europe, all these major economies in the West. And you can see that here in the photo. They basically describe that the usual investment advice to a 40-year-old seeking long-term financial security is to invest in long-term growth assets like equities, avoid currency risk and favor domestic asset allocation, choose a low-cost index fund, and don't look at the returns on a regular basis. And if the market falls, use the opportunity to top up. This advice that they gave here is basically what those old guys were saying. Passive, low-cost index funds. But this advice doesn't work, as you can see, in an economy like Japan. Imagine a 40-year-old Japanese worker in the years 1989. Today, at the age of 70, this is the performance excluding dividends. They did terribly. And just to show you some more statistics to support what I'm saying, so this is the annual percent change in the US population from 1900 to 2021. You can see that in 2021, or last year, we had the lowest population growth in the US in the US's entire history. So ever since the US has existed, this year was the lowest on record at about 0.1% population growth. And so remember what we said before? Increasing population means more potential revenue and means higher stock prices. Well, in the US, the population went up 0.1%. So it barely even went up. Keep that in mind. Now, we can also see here the world population growth from the 1700s, and we can see the red line is the annual growth rate. So it's not the amount of people, it's what was the percent change of the population? What was the growth rate? And you can see that ever since 1960, we peaked in terms of the percent growth, and we've been declining ever since. And this one here is very alarming. This is the prime age population in US, Europe, Japan, and China. So you can see that for the past few years already, the prime age population is declining. So we have this aging population of all these old people getting ready to retire, and we have a shrinking amount of people who are buying stocks. More supply, less demand, right? Because the people between 25 to 64, these are the people who buy stocks. These are the people who work. These are the people who contribute to society. If you have less people, if you have less workers, and that is when society slows down and when you start getting recessions. And so the importance of a strong workforce can be seen in the photo here, showing the Nikkei stock index compared to the total employment in Japan. And so you can see as the total employment rises, the stock index rises as well. So it's very much correlated, right? The amount of people working, the amount of work being done in a society, and obviously the valuation of the stock index. And so the 30-second summary of this is that the population growth from 2.5 billion to 8 billion people is the main contributing factor to the amount of prosperity and growth that we've seen in society. And this video of these old guys telling you to do passive stock index investments is not a very intelligent recommendation, because they are basing their advice off of a bias. And their bias is the growth that they've experienced prior, which is not likely to continue to occur. Because you need to keep in mind all these boomers who did this passive stock investing, who now represent probably the largest group of people in the world, they're now going to be looking to sell their stock portfolios to fund their lifestyles now that they've retired. And there's not enough new people being born to basically be working in the workforce to buy the stocks that these people are selling. And this is why it wouldn't be a good idea to invest into passive funds, because there is too much selling from retirement funds, from people looking to retire, and not enough buying from new population, which is already declining and is going to continue to decline over the decades to come. Now, if you enjoyed this video, I have a ton more on my channel. I have actually, if you're interested in crypto, the top investments and coins that I'm going to be investing in for 2023. It's actually a free document if you want it. It's down below. But thanks for watching the video. I'll see you on the next one.